Hi, can you all hear me, see me? Can I have a thumbs up? Okay, I can see a couple of thumbs up. Thank you. I'll wait for maybe another couple of minutes maybe another minute or so before I can start. But yes, thank you, Vinod. Thank you, Vishnu. Thank you, Avinash, for joining in from various places, wherever you're joining from. Hope you're doing great. And could you also start asking me questions so that I can actually start the session? I have a few questions that have already come into me. So it'd be great if you can ask me a few questions. Great. Yeah, another 30 seconds and we're good to go. Sorry, I'm just going to juggle because there are times I face issues with questions and they don't show up here. Okay, great. I have 6 questions. Wonderful. Um, Let me start with one of the many common questions that a lot of large investors ask, which is PMS and mutual funds. But before that, I will share or give you some context of what is on my mind so that we know what could, what should be the right strategy for 2024. And yes, then we can actually start from there. Right? So let me know. I'm going to share. Yeah, please keep asking me questions. It'll be great to see more questions coming in. Great. Okay. So we are currently in the midst of Santa Rally, as we call it right now. The markets have gone up by close to 7% in this month itself. One of the biggest triggers for this rally has absolutely been Mr. Modi's win, or if I may call it Mr. Modi's win, or the state election that he won. A lot of people thought this may not, they may not really win so many states, but then it turned out to be a surprise, a big surprise. So that is where this rally started, and we can actually now call it a Santa rally. More often than not, 80% of the times in and around Christmas, market goes up. So this time it is nothing new, but a lot of worry in people's mind, like, okay, what should be our strategy going forward? Yes, we have had a great year. What should be our strategy going forward, right? So let's touch base upon performance of various market caps, right? And this is updated till now, till 27th December. So first, if you see, Nifty 50 has given about 21 odd percent, which is absolutely wonderful. Nifty Next 50, which is the top 51, the 51 to 100 stock of India, has given about 26%. Mid cap has given 42%, and small cap, of course, has been the star, has given about 47%. Nifty 2 TRI, Nifty 200 Total Return Index, which is a mix of 100 large caps and 100 mid cap, has given about 23% return, and that is the benchmark that we at Mamani use to compare our performance. And then, of course, Nifty 500, because it's got some small cap, has given 25% or so. One of the strategies that has done really well, in fact, we had momentum as our course, as a part of our aggressive strategy, has given 42% return, while S&P during the same time has actually beaten Nifty and is given 25% or so. Gold, the reason why I wanted you to have a look at gold is primarily because people think gold has done well, but it's just given about 13 odd percent during the same time. This is right from January 1st till date. Okay. What is that pink line that you can see? Pink line is my company, Mira Money's performance, where we invest in large, mid, and small cap in various allocation, various proportions, and generate returns for you. Happy to inform you that we have generated 32% return on an aggressive portfolio, whereas our benchmark, which is Nifty 200, has generated about 23 odd percent or so. So we have beaten the benchmark by about 9% or so, right? We believe this is a wonderful. We generally expect to outperform by 2 to 4%, but this time we have been able to beat the benchmark by about 9% or so. That is the Mira Money performance. And any investor who has downloaded my app and has invested in a portfolio called High Growth Portfolio would have seen this return. Okay. Now, let me surprise you with a fact. It is not India that has generated the highest return during the same period. In the last 1 year, Brazil has given 25% return. Of course, this is a little dated, but during the same period where Nifty had given 7% till about last week, Brazil has given 25.2%, beating India's return by about close to about 8 or 7 odd percent or so. So it's not India that has generated great returns. We are fourth. In fact, Euro, which was expected that they will get into recession and stuff like that, has actually beaten Nifty also. This is a bit of a surprise, so I thought I should add a bit of surprise elements for you. Guys, please keep asking questions. I'm going to answer all of them once I close this. Now, people ask me saying, what is in for us in 2024? I think Santa rally can become a Shankranti rally, to a Holi rally, to a Modi rally by May, and can continue for a little longer than what we think at this point in time. What could be those 4 reasons why we believe that this rally can continue? One is FPI inflows will increase because there's a lot more stability today than it was in 2022 end, right? Global economies are more or less have coped up with recession. We are all set to get more and more money from various FPIs, especially from US, primarily because rate cuts are expected. And if the rate cuts happen, one of the biggest beneficiary is definitely going to be India. So these 2 factors will influence foreign money coming into India. Now, we have all seen DII, which is domestic investors, doing extremely well, supporting the Indian economy via SIPs and lump sums, both in insurances and PMSs and mutual funds, right? We think because we have had a great 2023, the flow will increase. A lot of people will break their FDs to get into mutual funds and equities. So this is going to increase, and this will provide the stability or reduce the volatility because of inflows and outflows that we will see from FPIs. So this is the third factor. And the fourth is, while we may say markets are overvalued, undervalued, in every undervalued or overvalued market, there are sectors that can always outperform. And in our opinion, 2 sectors that have the ability to outperform are banking, which hasn't done well, has gone through a lot of problems. There has been mergers, there has been cut down on personal loans, there has been no great credit growth and stuff like that. Banking sector looks good going forward, and especially pharma can surprise us with great earnings in the next year or so. So these are the 4 factors that will drive 2024, just like the way it drove 2023 for us. Of course, it may not really be small caps, it may not really be mid caps, it may be Nifty that will drive the returns. Just 1 second, I'm seeing few questions. So continuing with that, so if you see, Bank Nifty has been one of the key reasons why Nifty itself has done well in the past. It has been the biggest contributor. But if you see the current ratio of the price versus price to book value of Bank Nifty, it is abysmally low. If you could see this chart, if you see here, it has been near the lowest that it could see. So I think Bank Nifty should be our clear outperformer for the coming year or so. And if you have any questions around small cap, mid cap, large cap, I have a lot of charts to share. I will share those with you. So now I will get back to questions. So please feel free to ask me. And if you want any charts, something I've made a few charts. If you want to know, I'll be more than happy to share these also. Okay. Okay. Now the first question is from Vinod. I also have a few questions that have come on mail. PMS versus mutual funds. PMS is for larger investors who have 2-3 crores of investments, because that is when you can afford to invest about 50 lakhs with a single PMS. While PMS have the ability to outperform mutual funds over a medium to long term, the taxes come in very, very negative for PMSs, primarily because in mutual funds, when the mutual fund manager changes his stocks, he doesn't have to pay taxes. While in the case of PMSs, you need to pay taxes every time the fund manager changes your portfolio. That is one. And the second thing is you cannot scale up PMSs like the way you can scale up mutual funds. Today, if you want to start with a different idea in a mutual fund, you can start with as low as 5,000, 10,000 rupees. But with a PMS, if you want to start with someone else, let's say you're not happy with the current one, or you want to add one more, you have to give another 50 lakh rupees or so. So I am not honestly a big fan of PMS, but yes, that doesn't mean that we will not outperform. PMS may not be able to outperform. It has the potential to outperform also in the medium run also. What's the outlook for markets as we head into election season, Simadri? There's a lot more stability at this point in time. There's a lot of expectation that the current government will continue, which brings in stability to the market. And that's the reason why markets have also rallied. And as I said, state elections have proven that, or at least show that the current government has the potential to continue from here. So while there's always a probability that any new government can come in, but 90%, 85% chance or probability that the current government will continue. So we may rally till April, May, expecting the current government to continue. Of course, if we rally way too much, if the current government comes back to power also, then we will have a lull 6 months post that, in my belief. Because market always rallies much before the news. It actually rallies on rumors, and when the news comes out, it doesn't rally. Right? This is also one of the questions that was asked by on mail, saying if Mr. Modi is expected to come back and the market will rally, will the markets rally? Definitely, it will rally, and it has a potential to rally significantly as high as 24,000 Nifty from here before May itself. And if Modi comes back, we may not see a great return post that, but if he doesn't come back, we may fall 15%. So you keep or create a plan for elections, around elections, and do keep some dry powder if the elections are not in market favor. Vishnu, thanks for the question. What's your view on PSU small and mid cap banks? If they are not, I somehow feel private banks have to run now, because PSU banks have had a great run. I would especially not bet too much on small cap companies at this point in time. And I think banking looks good, and especially private banks, big banks in the private sectors should do better than most of the PSU banks. How long do you plan to run this session for? It all depends on the kind of questions, the number of people. And I've got a lot of positive feedback in the last 2 weeks, so I may continue till the time you like it. If you say, no, Anand, this is becoming boring, I don't want to listen to you, I will stop it. Vishnu, again, I don't think you should be a little cautious with small caps. I've told this before. I think in small caps there can be a no period of no return or low return or negative return. So please plan your small caps accordingly. I am not saying it may fall tomorrow. I'm not saying there's a bubble already, but we are going to that zone. So if you go towards the bubble zone, first look at locking your profits, then look at locking your capital. Third, if the bubble continues, look at exiting equity, lock, stock, and barrel. These are also one of the questions asked by somebody on the mail. So if you go towards bubble, please make sure that lock your profits, lock your capital, exit, lock, stock, and barrel. This is the 3 strategies that you can use. Yes, it is recorded, Suresh. You can come to my timelines. You can see This entire session will be recorded. I'm also on YouTube, so you can watch any of those. CPC ETF gave nearly 55% return this year. What's your view on ETF going forward? Um, it is looking good for medium to short term, long term, but I'm not saying you should add too much money at this point in time. In CPSC, if you want to stagger, it's still not a bad idea because these are value companies, so they may still prove out to be good. And if too much money chases them, it may turn out to be a great return also. But please watch out for individual PSEs valuations. If the valuations become too extreme, then I think you should not add too much money. In fact, look at exiting CPSE at some point in time. But I think there's still some bit of run left. Sugar sector, Vishnu, sorry, we don't do equity analysis. We are more of asset allocators. So we don't do too much analysis on sugars or power or stocks, especially. So I don't have any view on sugar sector, unfortunately, Vishnu. Okay, let me go and see what are the other questions. So I have to juggle between here and there because sometimes my streaming app doesn't show the questions here. So I'll juggle a bit and then see what are the questions that have come. But please keep posting because I will be able to see all of them. Okay. One question is, if the interest rate is cut down, this is from Hari Prasad. I think gold will become strong, equities will become strong. However, if recession comes, equity will struggle, but gold will still perform well. Any your thoughts on that, Hari? I'm absolutely certain that interest rates will come down in the near future. May not be this way, but not the India interest rate, but the global interest rate should come down. It's already gone up significantly. But don't fight the Fed. But the theory that when the interest rate comes down, gold goes up, I somehow believe there's a lot of theory to sell gold. I mean, sell in sense to make you buy gold. They sometimes they say there is a scarcity. Someone says there is gold is a good hedge against inflation. I have not been able to come to a conclusion with enough amount of proof saying that yes, this is true. I've seen when interest rate comes down, small caps especially do well in India. I've seen that, but I have not seen even ones where gold prices, for example, if the interest rates were a factor, why didn't gold move between 2021 to 23? I don't know. Why is gold moving now when the interest rates are going up? So I don't know. So there's no theory which proves that gold and interest rates are correlated. I thought so. I used to believe so. I also used to believe money printing should lead to gold going up. My theories have been proven very, very wrong. So I don't think there is enough and more proof for me to say that if interest rates or recession, if interest rates go down, gold will perform. Recession comes, I think, see that, we have been thinking recession era, right? This last 1 year, one of the words that was mostly used is recession. Europe, which was expected to go into recession, has beaten Nifty returns. I just showed you. US, which was expected to go into recession, has not gone into recession. So, while we may want to wait for recession, we may feel bad if recession comes, but I think too much of prediction on the economic front have not come through. So we should not wait for recession to come through. Just keep investing. Okay. Where the Santa rally will end, where should we book the final profit? Muzambil, thanks for the question. I don't think it is ending in the near future, right? Maybe there'll be a pause, maybe there'll be a bit of 5-7% correction, which keeps happening every now and then. I don't think it is ending, especially in large caps. Okay. I definitely think it is ending for small caps, maybe for mid caps, but I don't see it ending in large caps at all. Right. So my point is, if you are investing today, try and focus more on Nifty companies, large cap companies, and continue holding them. You may be surprised. You may make 20% return from Nifty itself. Nifty has to do a lot of catch up to small and mid cap. So this may be the year. I mean this 2024 may be the year for large caps. So it's not ending. It's going to continue. SGB versus gold Bs, what would be a call? Very, very good question, Hari. I like to answer this. For me, as an investor, gold is not a long term bet. That's my first point. I want to invest in gold tactically and not as a strategic asset. Okay. When I want to do that, I would either go for gold Bs or gold fund because I'm going to invest into it tactically. So for people, what does tactically means? When it shows signs of going up, I'll go invest. When it shows signs of coming down, I'll go exit. I'm not going to say that gold is a good asset, hold on to it as a hedge against inflation or bad sayings or wars and things like that. I'm not going to invest in gold for that. But on the other hand, a lot of people come and say that, Anand, I want to invest this for my son's marriage, for my daughter's marriage. And they are 10 years old now. Maybe in the next 10, 15 years, I may need it. For them, SGB is a lot better option for sure. So purpose is different. My purpose is solved by gold Bs and gold ETFs and gold funds. But for someone who's looking a little longer than what I'm looking at, who has a clear purpose in mind, which is longer term in nature, I would definitely suggest him SGB only, right? Okay, now let me see the next set of questions. Okay. Some AMCs have launched small cap NFOs recently. Since you said we are already in overbought zone, what's your recommendation investing in these NFOs? Great questions, Amadri. They are trying to catch the fervor of the market. It's like this is like the flavor of the market. Everybody is saying small cap mein maine itna bana, itna bana, itna bana. 50%, 60%, 70% returns are. I saw somebody showing 100% return. Of course, it's possible if you invest in stocks in some small cap, right? So I want to catch your imagination, and today small cap is a great place. If I'm the investor and the seasoned investor, I would avoid small caps. Yes, they are going to come and give you, maybe they can give you short-term returns, which can be like mind-boggling, but it's too risky right now for me to invest in small caps. If someone says I'm launching a large cap fund, I will rather go and invest my money with large cap today. I'm definitely not going to invest in any of the small cap NFOs. Okay. Should I, Chintan Mehta asked me this question saying, should I invest in US stock market? This is exactly what I was asking my CIO Naveen Shetty yesterday. Not asking, but we were discussing and a few other things that came up. While I agree, US markets are also doing well. But what our belief is that in India, when there is a growth that is happening on the market, it's basically because of earnings going up. In fact, the last few quarters, you estimated an X earning as an analyst. I come in and I am, let's say, the large cap company. I am coming and surprising you on the upside. Before 2019, it should be on the reverse. It was on the reverse, where I used to always surprise your estimate on the downside. So India is a lot more fundamentally driven market than US as per our analysis. So if you ask me, should I invest in US stock market? I would not invest in stock market, primarily US stock market, primarily because it is not backed by fundamentals. Again, I may be proven wrong. Tomorrow you may see earnings suddenly shooting up for a lot of US companies, but I would not invest in US stock market. India is a lot stronger. Okay. Sandeep, currently we are in the same situation in the market when in 2008, most of the new NFOs were launched, right? Okay. 1 second, Sandeep. Let me. So Sandeep, his question is currently we are in the same situation in the market when in 2008, most of the new NFOs were launched. No, I think NFOs are normal these days. If you think it is looking like the bubble that we saw in 2008, not in Nifty. Okay. The Nifty PE is about 20 to 22 and the forward looking is only about 18. During 2008, if I remember right, it was 27. Okay. You may say that, okay, there's a bit of a bubble in small cap. I would agree to it. But I don't see it as a statement, as a statement that I can make for all the market caps. I cannot say this for Nifty. I can say this for small cap. I may use it for mid caps, but not for large cap. So I am not saying there's no bubble. I'm not saying there's a bubble. There is a bubble in creation, especially in small cap, but not in large cap. Okay, let me again refresh and see if there are any new questions. And if I missed anything, please do let me know. Okay, 3 more questions here. Let me see the recent one once again. What should be my strategy if almost 90 to 95% of my money is invested in market right now and I do not have cash to average on 5 to 7% dip? Okay, finally, some allocation questions, Sai Chandar. Thank you so much for asking me this. Uh, if you are 90 to 95% invested in the market and if the market fall will not worry you, then I think you should continue with the same strategy. This is assuming that you're a young, your image, your DP looks young. So I'm assuming you're investing your own money for your own sake. So 90 to 95% is not bad in equity, provided you're okay to see a 5-10% correction at any given point in time. Don't worry on corrections at all. And but then the remaining 5% or 10%, you please keep it in cash. Okay, because you may see 5% correction at any given point in time. So what I'm saying is net 90 to 95% is a great allocation. If you ask me, mine 100% is in markets. But then tomorrow I know that there is also new flows that I keep earning money. We suggest mutual funds. We build portfolios for investors at Mira Money. So we build them, and then there is money flow coming in because of commissions and things like that, right? So our money is going to be continuous. So I'm working. I'll keep earning more and more money, and that money will flow to me. So while I'm 100% invested in equity, I know that there is new money coming in, which will help me to average out tomorrow if there is a 5-7% fall also. So it's like SIP. So it is okay. I think your strategy is correct. Please stay there. The only thing I would suggest is rebalance, right? Like your question, you asked me one more question saying, should we exit small cap mutual funds and then re-enter later or keep holding, sitting on a 46% profit, right? I would definitely want you to exit small caps. Don't look at exiting lock, stock, and barrel in one shot. Exit your profits first over a period of time slowly. Exit your capital first over a period of time slowly. And even after that, if it continues to be expensive, exit entire thing. So you are already creating a best money flow from exiting a small cap. So use that to invest into Nifty and large caps also. Right? Hope I answered that question. Okay, now let me see more questions. Okay. At this correction, where exactly do I allocate for this 5% correction? There is no, I mean, abhi to correction hai nahi. There is no correction that we are seeing at this point in time. If you see, I think you should definitely go big on Nifty 50. That's a place to be. Nifty 50, or for example, we like Nifty low wall 30. That's a fund that we really like. So these are the two places where you should put your money into, right? Okay, let me see if there are any other questions from YouTube channel. Okay. Okay, what are the next questions? Okay, one second. Okay, one more. Which sector has the probability of boom in 2024? I think you should see my initial part where I showed that Bank Nifty looks great. Bank and pharma and auto, I have not shown auto so much, but bank and pharma especially look great at this point in time. Especially banks have the potential to bring in the next set of returns for Nifty. So if you don't have banks, maybe you should consider having banks. But if your mutual fund already has 30-40% of your money invested in bank, then I think you are well allocated. So you should not worry too much. So my point is bank, pharma, auto. I want to say IT, but internally we believe there may be some headwinds there. So we are not saying IT yet, but bank and pharma look very, very solid to us, Chintan. Okay. Now next question. Sorry, one second. Okay, what are the next questions? I mean, I have a couple more. Please keep asking me questions so that the flow can be continuous. Is there a way to invest in Brazil? Someone has asked because I showed Brazil as a fund. I think there are few funds, especially from Edelweiss, if I'm not wrong, and HSBC, if I'm not wrong, which helps you to invest in Brazilian ETFs or companies. Sorry, I don't have too much detail there. But yes, there are ways in which you can invest in Brazil, you can invest in Europe also, you can also invest in China if you really want to. Of course, everybody knows about US, but these are the three countries that gave great, not China though. Europe and Brazil gave better returns than India. So people may look at these two countries. There are funds that can or will help you to invest into these countries as well, right? So yes, HSBC, Edelweiss, you should go do your analysis and then invest into these companies. I am betting on Bharat 22 ETF that gave phenomenal returns. Can I continue with this in 2024? Um, tough one to say, but yes, you can. Just keep an eye on valuations. That's my only suggestion, because sometimes valuations go way too high. And I'll tell you why I keep saying valuation, right? What is investing? Investing is paying a price today for future earnings, right? So let's say whether it is FD, commodity, debt, currency, anything that you take, you pay 100 rupees today, so that in FD you make 7% every year. So that's why it is valued at 100. Okay. Similarly, when you invest in Bharat 22 ETF, you are expecting earnings to come from those Bharat 22 companies, right? Now, if you end up paying too much of a price here, whatever is the earnings growth, you will not be able to make returns. So please keep an eye on valuation, and that is the reason why we are saying no to small caps also at this point in time. It's great. It's whatever has given great returns doesn't mean that it will also be followed up with that. In fact, the other way around is also true. Whatever has fallen too much may not really end up showing positive returns, or may continue with the same trend going forward. Also, we have seen that in IT, recession. Europe is down, US is down, everything is down, right? So that's what was expected. But IT turned around because IT already had fallen, right? But all good companies revive back. Only bad companies die. Good companies revive back. So nothing is permanent, whether it is great run up or bad run up. It will all average out. So be very, very careful of valuations. If you think Bharat 22 is valued correctly, go for it. If you think no, or if you analyze and figure out that no, it is looking expensive, avoid it. It's okay. It may be it may be that you didn't invest in it short term, but it is okay. Risk is one of the key things that we all ignore during bull markets, and during bear market, give it too much of an importance. This is a good line. I'll write it on LinkedIn on this. Risk is something that we give too much importance during bear market and too little importance during bull market, right? So at this point in time, whatever has worked may not really work going forward. So please be very, very wary of it. That's my larger point, right? So I hope I answered that question, Simadri. Okay, IT seems if you on only holding the index, not individual stocks. So I have a differing view. In fact, internally also, within my team at Mamani, we keep differing on many things. Right, that's how you make a healthy, nice team, and that's the reason why we have been able to give over 30% return for our investors. They looked at fundamentals and they said IT is not good. I looked at price and I said IT looks okay. Both are correct in their own places. They came correct on the fundamentals. I came correct on the prices. In my opinion, IT today looks okay. Before, when Nifty or TCS, if I remember right, was at 3,200, it looked cheap, very, very cheap to me. So I went big on it. Index looked very, very cheap on it. So we went big on it. At least personally, I went big on it. At this point in time, it's not like a great value pick. I still believe banks today are a lot more valuable than IT. Okay, Sai Chandar, can you give me some guidance on how to make an exit strategy? Because being this young, I have no hurry of withdrawing any money, but I'm also into high risk, so holding a lot of small and mid caps. So follow 3 steps. Just keep this in mind. Profit locking, assuming that you have entered into a very high valuation zone. Do profit locking first. In the sense, you invested 100, 100 has become 140. Slowly move away that 40 into undervalued sectors or stocks or mutual funds. Okay. Profit locking is your first. So 100 has become 140. Slowly move away 40. Next, see, even after doing that, if your overall allocation in that particular sector is well beyond what is acceptable. So, for example, you decided that I'll never have more than 20% in small cap. You exited 40%, and even after exiting the profits that you made, that 20% allocation in small cap is at 25%. Now reduce it down to 20%. That is a capital exit. Third, and the most important, which generally doesn't happen every now and then, is equity overall will become expensive. You cannot invest in small cap, you cannot invest in mid cap, you cannot invest in large caps. All sectors, everywhere, you see only bubble, 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 bubble. At that point in time, even if you are rightly allocated in small caps or mid caps or large caps, pick all that up and create a debt strategy. This is what active allocation does. So profit locking, capital locking, asset locking. These are the three things that I would suggest for you. Let me know if you understood this clearly, Sachin. And if you want me to, if you want to ask more questions, I'm happy to answer on that particular thing. You got my point, right? I'm going to ask. Okay, wait for the next set of questions. Any other questions? Okay, somebody on YouTube. Sorry, it's not YouTube. Okay. Should we invest in micro cap? Okay, one second. Before I go there, I'll answer Sai Chandra's question. Capital locking, two. Okay, Sai Chandra says, okay, could you elaborate the point number two a little more, which is first is profit lock, capital lock, asset lock. Capital lock is, let's say you invested 100 rupees in small cap. That is what your allocation matrix told you, right? You invest some in large, some in small, some in mid. That's what you would have built a portfolio around, right? If you're not, please do it. So say, you cannot invest all your money in small cap, boss. You cannot invest all your money in mid caps. You cannot invest all your money in large caps. You have to invest your money according to your risk profile and make the best out of each market caps, each sectors, each themes, each factors. You have to create that. If you have not created it, do create it. Now, on the second part of capital lock. So your capital allocation framework said we should invest 100 rupees in small cap. Okay, you invested. Now that 100 has become 140. I told you to exit 40 from there. You exited 40. Now, even after exiting 40, that 100 has become, let's say, the capital allocation because of undervaluation, because of not so much growth outside in large and mid cap, your small cap is looking overvalued or over allocated in your portfolio. Not because of growth in small cap, but no growth in large and mid cap. You pull that money out so that it comes back to the same 20% or whatever is your allocation. It's not because of small cap doing well, it's because of large and mid caps not doing well. Your small cap is looking bulged. Reduce that and put your money into large and mid cap. That is what we call as capital locking. I know it's difficult to explain. Maybe let me see if I can make a video around it. If you have for example, 25 lakhs guna, okay. So today's guna, if you let's say if you really like us, Mira Money, I mean me, I'm the co-founder of Mira Money, and you say, okay, let me give Mira Money guys a try. You download the app and you go and see that, okay, I want to invest in high growth basket. Now, what we have done in the high growth basket is what I will do for you, which is I would invest your money in lump sum today, in spite of the market going up, in majorly 4 funds. By the way, we do only index funds. We don't believe in giving money to fund managers. We believe our asset allocation framework will work better than fund managers. So that's the reason why we give it to index funds. 75% of your money will go into Nifty 50. 75%. Okay. 15% will go into something called low volatility alpha 30 fund, which means we believe this factor will be able to generate good returns in the next 1 to 3 years or so. and bring in or reduce the volatility in your overall portfolio. So 75% in large cap, 15% in low vol alpha 30 fund, okay, and 10% goes into small cap. This is what I would do for your portfolio at this point in time. For large caps, I would generally go lump sum. For the other two, I will go stagger it over a 4-week period. Okay, got it right. If you should download the app and see. In fact, all this is crystal clear. My commissions, your charges, everything is mentioned in the app. India High Growth Basket, which is very very high, very aggressive, where we generated 30% return. You will be able to see it. Okay, Sai, somewhat understood. I have small cap, mid cap ratio, constant or sector allocation ratio, same. It depends from person to person, Sai. I don't know you enough for me to tell you that this is the right strategy for you, this is the right allocation for you. But in general, don't go beyond 50% in small and mid cap. That's a broad number I'm saying. This is just a ballpark number I'm saying. I myself may break that, but this is a ballpark number. Ki 50% stability, 50% aggressive is something that you can go in for. If you ask me personally, because I am doing this day in day out, I go very aggressive, but I may not recommend that to you because I don't know you as a person. Don't go beyond 50%. Very very aggressive into small and mid caps. What are your views on index funds, Love? Love is his name, or Nifty Bees. I had some network issue. Okay. So he couldn't hear me. So Love Tanwani. Um, my views on index funds are proven by S&P, Standard and Poor's report itself, which is PIVA report. 92%, or let's say 90% of large cap fund managers over a 3 to 5 year period don't even beat the index. Okay, whether you go direct or regular investing into, let's say, an XYZ blue chip fund or an alpha XYZ large cap fund, you expect him to beat the index. 90% of them forget touching the index, forget beating the index, underperform the index. So my question to them is, then why should I pay you so much charges? I would rather give it to index. So my view is index funds are a better option than most of the active mutual funds. Now, the issue with index funds is when you invest in an index, you are guaranteed underperformance, right? In the case of active funds, maybe if you get it right, you will be guaranteed outperformance. Not guaranteed, but at least you will see outperformance. But in index funds, because of the cost added to it, index ko aap underperform karoge. That is where fund manager like investment managers and asset allocators like me come into this picture and say that, okay, I will invest in index funds, which I don't think anybody in India does at this point in time. I will invest in index funds, but then I will modify, manage, allocate, move funds around in such a way that I will put your money in undervalued assets and exit out of overvalued assets, thereby creating 2 to 4%. That's what the past says. I cannot guarantee, commit anything, but that's what the past returns have been: 2 to 4% more than index itself. So we basically use index funds, large cap, mid cap, small cap, factors, themes, sectors to beat the index, right? So my strong belief is index is the way to go, and more fund managers will keep underperforming, primarily because there is no information arbitrage. I can talk about that for long periods. Primarily, there are no information arbitrage that is left. So my view is, use in what I do, or we at Mira Money do, my investment team does, is we use index funds to beat the index. I hope I answered that question. No, by same, I meant what was initially decided by making the portfolio. Yeah, so Sai, I think you're trying to understand what should be a right allocation. I don't know, honestly. I don't know what's your age, but if you're young, if volatility doesn't matter too much to you, then go be a little more aggressive. That is not a problem. That's what I would say. But if you want more, you can just DM me, or write to hello@mira.money with your questions. We should be able to answer it. Okay. What are the next set of questions now? Okay, let me see. Oh wow, 47 question. Dharmesh Patel is bringing in a very important point, which is seeing the layoffs happening now and then. I would want my PF money also to be growing in the market. Should I put it in equity, lump sum mutual funds, or any better option? No, Dharmesh. PF is our emergency fund. PF is our hedge against inflation, hedge against market conditions, hedge against bad news is, in my belief. I would not recommend even 1 rupee to be moved away from PF. Continue with it. You're making 8.5%, just for 8%, tax free and compounding. I would not recommend even 1 rupee to be moved away from PF. Please do not move any money from PF to put into some aggressive asset, because that is your go-to asset when things around you goes for a toss, and it will happen. See, today it's all rosy. You remember, I don't know if you were there around 2008, markets were down 52%. Well, that is not done. So PF money, do not touch. Ranjan Mishra has an interesting question: whether investing in small cap chemical fundamental good company is good now. I think chemical companies have had a great stagnation period. Maybe it's time for them to grow up. Yes, if the company is good, you may want to invest into it. Stagger it. That's what I would suggest to you. It's not looking bad. Put it this way. Divakar makes sense. Okay, thank you. Very well articulated. Thank you, Chintan. Please provide some insight on investing in bonds. Thanks, Pradeepa, for asking me this question. Please provide some insight on investing in bonds and debenture and Bharat bond. Apart from equity, how can we allocate in this product? It's a very person-specific question. For example, I don't believe in bonds because I said PF and things like that. I don't like too much of a bond in my portfolio. Maybe 5-10% is suitable for me. For you, maybe up to 10-15% is good. Okay, so this is what you can do. And among bond, debenture, and see, I also play aggressive on bonds. Let me bring you a different picture. I will go big on 10-year GSEC, government security, which is highest credit risk, right? Zero credit risk, highest credit rating. I will go big on that in the next few weeks, few months, primarily because when the interest rate comes down, you will see that you will make equity kind of return from bonds also. Now there's no worry about taxation, whether you hold for 1 month or 1 year or 10 years, the taxation is the same. So when you invest in GSEC, long tenure, funds, you are or can make equity kind of return. When I mean equity, 12-13% kind of return from bonds also. I'm going to do that in the next 3-4 weeks when we see that interest rates are expected to come down. I'll talk more about it maybe in the next session or so. And I also written a detail or made a detailed video on that on my YouTube channel. Please go watch it. Asset locking, Dharmesh, means everything around equity is looking like a bubble. In that case, you should not shy away from exiting equity also. That's what I meant by asset locking. Yes, you may say that, okay, I may say that today 90-95% of your money should be in equity, but the same guy, which is me, will come back and say that you should not have 1 rupee in equity or 40% in equity. That is what I call as asset locking. When things around you looking too expensive, the same is on the reverse side, right? When things around equity is looking too cheap, even though I told you to invest 10% in bonds, I will say pull that money and put it in equity also. That is called asset locking. Okay. Have you ever wondered why most conglomerates in India have multiple separately listed companies, wherein in US it's usually just one company, even in the extremely varying business verticals? Too big a question for me to answer, but I can say maybe they are completely unrelated businesses, and that's the reason why they have many companies that are listed. For example, I would want Reliance Retail to be listed. I would want Reliance Jio to be listed. I would want, there are so many other unrelated companies. So what are they doing in one single umbrella? And that's the reason why they may have many companies going forward. Okay. Okay, 3 more questions. Is it 1 second? 1 second. I'm seeing a few more questions. Yes, it's the last session, so please feel free to ask me more questions. I am investing in NPS for the last 3 years, but do not see any great returns. Need your opinion if I should continue. Dharmesh, I'm surprised. Why didn't you get too good? You should ideally have got some decent amount of returns. I mean, at least double-digit returns or so. Please do look at why. What is the reason? What's your allocation there? Go a little deeper and figure out why it has not happened so. And delve a little deeper. It should ideally be double digit is what I'm assuming. If it is not, then yes, it's time for you to go a little deeper and figure out what is the reason for not having that. Okay. So, any last questions before I say bye bye for this year? And also, please do suggest me what should I cover more, so that no, or how what are the kind of questions that you have in mind today? There are two three beautiful questions. I really like them. So, if you have any more questions like these, please do just write to me at hello@mira.money. I should make a video. I will make a AMA around it, right? So that will be good. Yeah, any further questions? Any last question before we say bye bye? Okay, let me see if there are any questions that have come by. Cool. So if there are no more questions, I would like to say thank you to all. Have a great holiday if you're taking one. I'm going to take one from tomorrow. Have a great new year. Very, very prosperous 2024. Please do follow me. Do share this video with your friends. If they have any questions, let them ask me at hello@mira.money. Thank you again, and I look forward to seeing you all. Yeah, Chandan, yes, it is uploaded on YouTube, and also here it will be in your feed, in my feed rather. It will be in my feed. Yes, you can go to my YouTube channel. It's called Anand K Rathi, Anand Space Case Place Rathi. You can go watch it anytime that you want to. And this is my third AMA. All the AMAs are there. So please do go, feel free to watch them as well. So wish you a very, very happy new year. Have a great, prosperous year, and I'll see you in 2024. Thank you. See you. Bye bye. Thank you, Simadri. Really wonderful questions. Okay. 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 Once again, Mudit has got one more question. View on brokerage stocks. Great time to be a broker. Great. For example, my business has zoomed in the last 1 year, much beyond what I could have thought also, right? Great time to be with brokering firms. Great time to be with wealth management firms at this point in time. There's too much money to be made. So yeah, I don't think we are valued correctly at this point in time. If you, while I don't know, I don't do stock analysis, but our business is growing. Till the time there is a doomsday, till the time there is a big problem, markets have crashed. I think most of the investment related businesses should do well. So whether it is broking, whether it is wealth management, whether it is AMC, should definitely do well. Good question. Good question. Mudit. Thank you so much. Thank you, Chintan. Thank you, Simadri, for appreciating. Thank you, Sai, for appreciating. Thank you, Love, for appreciating. And it has been wonderful. This is my longest session, I believe. I hope to see you soon. And if there's any questions, write to hello@mira.com. Good night.